What do you think? You warm enough over there?
I am. It's it's all about layers. Quite frankly, it is.
Everybody loves layers, though.
There's a lot of layers to this conversation already.
I'm a big red onion. Okay.
Haven't earnings? I mean, if Einhorn says, I think this is the most expensive market that we've been in, someone like Ed Yardeni would say, that may be true, but justifiably so. Look at where earnings are.
Yeah, I love Ed's comments. We can, not just because we agree, but we kind of come from the same vintage, and he's talking about some of the same things that. Yeah, we do.
No, you don't.
Go ahead.
Okay, just continue. We're in the process of transitioning in this fourth year of the bull market from a momentum, multiple-driven market to an earnings-driven market. When we wrote our year-ahead piece for 2026, we talked about traditionally and historically over the last 80 years when the S&P 500 moves into more of an earnings-driven market, the returns are roughly half what a momentum and multiple-driven market. Doesn't mean it's not going to be positive. It's still positive. That, to me, is a much more fundamentally driven market. And what's happening with the market and with the participants with these binary moves, buy, sell, there's a big disruption between short-term, intermediate-term, and long-term. And I think at the end of the day, what the market's showing you is that other areas of the market are working. Dividend growth, value, small cap. And the more that they work, the more credibility they have. The more credibility they have, the better performance. So performance begets performance, and we continue to think that those areas will continue to lead in this broadening out.
Barclays today that I want to get to. We dropped these down from our A block, Brian, because we just didn't get to it. Monolithic Power, you sold.
Yep.
And Astera Labs is getting crushed today.
Yeah.
And you're a buyer on that dip.
I am.
So why don't you start there with the one you're buying on the dip, Astera, and then we can go into Monolithic.
So you talk the talk and walk the walk. As the market transitions more into earnings driven and broadening out, we want to take our SMID portfolio and actually make it smaller in market cap. So that's why we sold Monolithic Power. And then we went into Astera Labs and then redistributed into 2 or 3 other stocks that we own, including one we're going to talk about later on in the show. We think that this is a really interesting company in the semiconductor space, especially given the fact that they're really centered around data centers and the connectivity there. Very different than a chip company and a lot. So we really like it as a mid-cap company around $25 billion.
Okay. Brian Belski, back to you.
Hey.
You bought Pinnacle Financial Partners. Regional bank.
We did. We owned First Citizens for about 5 or 6 years. In fact, First Citizens was, I think, the best performing bank stock in the S&P 1500 in 2024. Mm-hmm. So this is a big stock. And so we also used to own this company called Synovus Financial. Pinnacle bought Synovus Financial. And we wanted to see how that integration happened, number one. Number two, following the theme that I talked about in the prior segment, getting smaller in terms of our portfolio with respect to market cap. Pinnacle, we think, in the Southeast is a great player with respect to a smaller cap regional bank.
So you sold First Citizens.
We did.
And you bought Pinnacle with
1 for 1.
Okay, 1 for 1.
Yep.
Carrie, you sold Health